A1 Trading to Tower, you are clear for takeoff. Before the show begins, remember that trading involves risk, and anything shared in our content should not be construed as financial advice.
I do have some trades on. I am long Aussie CAD.
For these positions, I wouldn't mind holding them for 3 months.
So around 100.5 to 99.5 in that sort of area.
Pulver alerts, I have 100 shares at 11.79. I closed out today.
Start building your strategy based upon historical data.
Welcome to A1 Trading.
All right, everybody. Good morning and welcome to another live stream. Happy Monday to you. Hope everyone had a nice weekend. Hope you are well rested, ready for some more trading action. And for my US friends, happy Thanksgiving week. We have a little bit of a different than usual schedule this week. We will be out of office for Thanksgiving and the Friday after. So Thursday and Friday are holiday days in the United States. I will be eating turkey and going on hikes with my family. It's going to be wonderful. And but up until then, we're going to be streaming. We're going to be setting up ideas for the rest of this week. Couple things to note about Thanksgiving week. It is historically one of the most bullish weeks in risk assets. I find that to be incredibly interesting given the circumstance that we've gone into Thanksgiving week. Will we get that delivered this year, or will we get some disappointment? What I mean by that is that typically during the week of Thanksgiving, you do tend to see a rise in risk assets. Specifically, Bitcoin has a strong period during Thanksgiving week, usually. The NASDAQ does as well. So we'll see if we get that this year. Bitcoin, interestingly, trying to hold on to some gains here. Let me adjust my support level here. Bitcoin trying to hold on to its gains from this past weekend. We'll see what happens. It was not a blockbuster weekend for Bitcoin, but you got to point out at least the idea that for now, bulls seem to be trying here at support to reverse course here. You've been in free fall for Bitcoin. I think it's in a very important market right now, not just to Bitcoin, but of course to stocks and to global liquidity even. We talked a little bit about, in my Sunday video, we talked about the concept of the yen carry trade concern, specifically with, let's do JP30Y. Is that right? Yes. JP 30-year yields, you can see, have been on the rise here recently. This has been a thorn in the side of investors here recently because the carry trade is a very critical thing to global liquidity. Okay. So without getting too jargon heavy, people borrow yen and they use that borrowed money from Japan to go buy risk assets. They buy stocks, they buy bonds, and there exists some sort of pseudo arbitrage where investors can go borrow from the Bank of Japan at low interest rates, right? And then use those funds. Let's go to the Japanese 10-year yield, right? So let's say you go borrow money from the Bank of Japan and you can borrow it at a low rate and then turn around and go get higher yield, right? So like, think of it very simply. You borrow money from the Bank of Japan and let's just say at 2%, okay? At 2% yield or at 2%, that's what you owe the Bank of Japan. You're borrowing at a 2% interest, okay? You then turn around and you lend to the US government. And what do you get for that? Roughly 4%. Okay. See where I'm going with this? You lend, so borrow from Japan at 2% interest. You pay this. This is a debit. You owe 2% interest, and then you lend to the US at 4%. Free money, right? That's the idea, or at least the theory. You borrow from Japan, you lend it to the US. This is the carry trade. It is one of the most predominant things in the currency market. And in terms of what big hedge funds, institutions, a lot of the activity in the foreign exchange market is doing this. They borrow from low yielding, they buy higher yielding. So you might think, well, that's free money. Well, it is, unless this dynamic starts to change. What if the interest owed goes up and the rates of this place, the US, go down? Suddenly, this trade no longer yields a profit. You see what I'm saying? That dynamic is a little bit concerning to investors right now, because that's kind of what's happening. You have the US lowering their interest rate, so the yield you get for lending to the US is going down. The rate that you borrow from Japan is going up. You see how that works? That is the concern people have about the carry trade. Now, do I see this as a cataclysmic event that's going to crash the markets? Not really, no. I think that you are going to get interest rate cuts, but there's also, in my view, not as much of a threat to interest rate hikes in Japan as previously thought, with the new prime minister there, who is a little bit more on the dovish side. And if we actually take a look at some Japanese yen stuff, interestingly, if we go look at Japan actually is sitting in a situation where they have sticky inflation. So that is sort of a reason to hike rates. But then they have sort of not the greatest growth. So the current new prime minister from Japan is more on the side of wanting to keep interest rates low. But we'll see. Anyways, it's that's a force to think about. Regardless, I'm still bullish overall in the NASDAQ. I talked about this extensively in my videos over the weekend. I did 2 Saturday and Sunday video. NASDAQ, Dow Jones, yen pairs I'm bullish on, looking for pullbacks across those. I like CAD yen, I like Kiwi yen, I like dollar yen, I like euro yen. I'm pretty risk on in my sentiment right now. I think that this dip is a buyable dip. You are talking about a pullback in the NASDAQ at around 9.3% peak to trough. That's a healthy dip. I don't think that you necessarily need to go much further lower than that. Could we? Absolutely, we could. Like, please understand, if I'm wrong, I stop out. Somebody pointed out in my video yesterday, they left a comment, and they say, Nick, this is ridiculous. You're just covering all your bases. Meaning, you're saying it could go up, it could go down. And look, that's one of my biggest pet peeves when people do that. So I am telling you, I think this market has room to go up. But I'm also saying, if I'm wrong, I'm not going to get destroyed. That's the difference. Covering all your bases as a trader is what you're supposed to do, right? You're supposed to play defense. Covering all your bases is literally a defense tactic in baseball, right? You're covering your bases. You're supposed to play defense in your trading. If I'm wrong and this thing tanks through the lows this week, which I don't think is the likelihood, I think it could happen, but I don't think it's likely. I think likely you get the historical seasonality of the week of Thanksgiving, which is, historically speaking, the Thanksgiving week is usually a positive week for markets. After Thanksgiving, let's see. I think from a technical perspective on the NASDAQ, what I'm looking for here this week is to redraw in this Fibonacci retracement level. Now, big picture, I think you still have, moving averages on our side. The bulls held the 100-day moving average, at least for now. Let's see if we can keep that. But I think from a technical basis, what would truly be very bullish for this market would be if we can actually come up and start taking out some of the minor resistance points that we've seen within this recent downward trend. Okay. So I'm going to specifically talk about this area here. On Thursday of last week, we had sort of what I think is a bit of a capitulation / fear event candle. People watch the NVIDIA earnings come out. Rockstar. The stock market launched in the morning only to end down over 3% on the NASDAQ in a day. That is a nasty swing. Can you imagine? I mean, some of you guys, I personally I own stocks, so I saw this happen in my account, but a lot of people probably did. Can you imagine if you don't have stocks or crypto, what that might have felt like? You open up in the morning, you're very green. After a couple weeks of downside, you're like, all right, here we go. We actually look good. And then all of that gets wiped out by a significant amount. We had an intraday downswing of 5% just about in the NASDAQ. That was a nasty sell-off, right? So psychologically, what do a lot of people do in that environment? They are like, I'm throwing in the towel. I'm out of here. I'm selling my stocks. This is ridiculous. And so I think you may have had what is called a capitulation event or a capitulation candle, which is when people get knocked out. They get kicked out of the trade. They're too afraid. They're like, I'm out of there. This is not working. I'm gone. And so my basis for why I think we could go up from a technical basis, right? Technical analysis first here. We'll talk fundamentals in a second. Is I think you've nailed a lot of people on this move. I think this flushed out a lot of people who were bullish, got knocked out of the trade here. You've now come back into where we found resiliency from the bulls. Like this has got to be the most stronghold spot from the bulls on this visual chart. If this breaks, technically I'm bearish, okay? At least for the time being. I've mentioned that this is the line in the sand area for me when it comes to NASDAQ bullishness. If we roll over and fail, I'm out of there. I have to call it quits on the trade because at that point, we have lost the 100-day moving average. We've lost critical support. And that capitulation candle, which I think it was a capitulation candle, no longer looks like a capitulation candle, but rather a straight up distribution candle, and we're going lower. But I don't think we're there. I think we have a good chance here of trying to hold this area. You have a roaring bull market in 2025. The resiliency from the April lows, I think, wants to follow through into year's end. We had a 60% rally, then a healthy almost 10% pullback. That's needed. I think it's a good thing. So I remain bullish on this market. Where I think you have technical bulls, some of the more intraday bulls come back in and be bullish, is if you can actually get head and shoulders above this right here, okay? Specifically, the 38.2% retracement. If you can get above this area here, let's say you get this kind of move today, tomorrow, and in this week, that is very constructively bullish. I think you'll start to get the hourly candle guys, the 4-hour candle guys and girls to start flipping script back bullish. For me, I'm on the daily chart, the weekly time frame, the monthly time frame. They still look bullish. Okay. Let me show you the weekly. Weekly, nailing huge support right here. Past resistance, past support, finding some support here. This is a major weekly level of support. I think we can go higher. Okay, what about the monthly? I've said on my channel over and over and over, the monthly candle looks perfectly fine unless we close below last month's low. Everything from a technical basis tells me we're not dead here, right? Now, if that changes, I'm not saying that I can't change my mind. I'm telling you exactly what would change my mind. What would change my mind is if sellers come in today and they completely wipe this out. If that happens, trade's done. I'm out of the trade. I take a loss. I move on to the next one. Okay. So that's my thought process on NASDAQ from a technical basis. I am still getting NASDAQ confirmation bullish signals within EdgeFinder. We have top setup simple still looking good here. By the way, if you're enjoying the stream, do me a quick favor, hit the thumbs up button, subscribe if you're new. We're here every day trading NASDAQ, gold, currency pairs. We'll talk about that in just a second. I'm focused very heavily on the NASDAQ because it is right now, it's my top trade and my most convicted setup. I do also have a long position on gold that I'll talk about in just a second. NASDAQ, part of the reason we are bullish, overall getting a +8 score. Sentiment looks okay. Crowd sentiment's really bearish out there. Technicals are getting a mix because seasonality looks good, but you've recently had some moving averages flip more into the bearish territory. Economic data looks perfectly fine for now for the stuff that we track. Let me show you. So if I go over and I say, let's take a look at our US economic heat map. So if I go US economic heat map and we're analyzing this from a NASDAQ perspective, let's go through it really quick. GDP growth, bullish, better than expected. We had really strong growth in the prior quarter. Manufacturing PMIs, bearish. They missed expectations. Services PMIs beat expectations. This is a forward-looking indicator that looks good for the U.S. economy. Retail sales were better than expected. We'll get new data on that this week. CPI has come in lower than anticipated several times in a row. We'll call that okay because that doesn't hurt the inflation story. What would hurt the inflation story is if you had inflation that was dramatically outpacing expectations. We don't have that. We have inflation coming in lower than expected. PPI, right, looks okay. PCE looks okay. Wage growth, better than expected. People are getting higher wage increases than inflation right now. Not necessarily on every item. I get it. Certain items in the store are going up faster than people getting wage increases. I'm with you. But on an aggregate basis, based on the CPI, 3.8% wage increases are bigger than 3% on the CPI. It's not a huge margin, but this is good for consumer spending. If people are getting bigger increases on average than what they're spending money on, that's positive for the U.S. economy. Unemployment rate's at 4.4%. Yes, up from expectations and from prior. This is not necessarily good for the U.S. economy, but it's still at 4.4%. That's historically pretty low. 5.8% is your long run average for unemployment rate last time I checked. Initial jobless claims last week came in just fine. JOLTS job openings, we have kind of an outdated reading there, but JOLTS job openings beat expectations prior. ADP numbers came in good, better than expected, and non-farm payrolls came in good, better than expected. I think we're fine here, okay? I don't think there's a reason to have a panic attack about the NASDAQ and stocks at this time. And if I'm wrong, we stop out. I reiterate that every time I say this because I don't want somebody who's listening, who's new to this stuff, to think, oh, Nick is bullish. It must go up. I could be wrong, but I've managed my risk. My trade size, I have this NAS long, is not so ridiculous that if I'm completely wrong about it, then I'm going to be devastated, right? That's a gambling approach. Good trading is small risk per trade relative to the account that you're trading. You're letting Edge take you over many trades to where you want to get, not over one trade. Nobody knows with certainty what's going to happen today or tomorrow, okay? But path of least resistance, I think NASDAQ can have a nice week. We know historically speaking, seasonality-wise, Thanksgiving week is one of the most positive expectancy weeks of the year, okay? We have that in our economic data or in our seasonality data, okay? Annual seasonality, let's take a look here. You are talking about right now, NASDAQ, okay? This does not guarantee anything. It never does. You're talking about right now. See that little bump? That's Thanksgiving week. Thanksgiving week is historically one of the, if not the most, it's like one of the most bullish weeks in markets due to, in my opinion, Thanksgiving holiday, low volume, a lot of traders out of the desk, less economic data. People aren't worried about, oh, NFP is going to crash, right? People kind of just park money in the markets and flows in. I think that's why. That's my best guess. Regardless of whether that's right or not, doesn't matter. The market historically tends to go up during the month of Thanksgiving at a significant, statistically significantly more than usual. Okay? Does that make sense? Does the NAS idea here that I have make sense? Give me a 1 in the chat, or if it does, a 2 in the chat. If you don't understand, if you're like, why the heck? I mean, I've mapped out my reasoning for the trade. I've taken this trade 7,000 times in my trading career, and I like the setup. So, EdgeFinder confirmation, 100-day moving average, major support levels, seasonality in our favor, right? Top setups from NASDAQ getting a solid reading. I've got everything I need here for a good trade. Now, doesn't mean good trade does not mean P&L is positive. Good trade can mean P&L is negative. Good trade means it met my criteria. We're good to go. I pass all my presentation check marks. And I say this frequently in my videos, guys, but I want you to think about something real quick. I just presented a trade that I'm taking. I'm in a trade. I explained exactly why I'm taking the trade. I outlined what I'll do if I'm wrong, how I'll handle it if I'm right. I'll trail stops. as I always do. If you're familiar, you know I trail stops. I use market structure to do so. Essentially, I'd be looking to trail stops at least as a break of this major area here. If we got this kind of move, I'm probably going to lock in something on the trade. So I've mapped out, I've presented my trade here. I would encourage you, even if you don't post it anywhere, try something for me. Try presenting a trade idea to yourself, to a significant other, to your trading friend, to your trading buddy. Record it, send it to your friend. Because I think everyone who is serious about their trading should be able to present their trading ideas. I got a new feature to show you guys in the EdgeFinder. Can we see your new EdgeFinder feature, please? Yes, Robert, check it out. So I'm excited about this. See, market sentiment is probably the most popular features within EdgeFinder. People love the commitment of traders report. People love their sentiment gauges. We added a credit spreads tracker, and I'm really excited about this because if you know this stuff, it's really cool. All we're doing is we're looking at corporate bonds demand versus treasury bonds demand. If this chart is trending up, what that tells you is the market is a little bit more in terms of market money flow. Sentiment on the headlines perspective is a little different than money flow. Money flow is trending towards risk on, credit spreads are tightening. People are buying corporate bonds more aggressively than they are buying treasury bonds, okay? If people are really worried, they unwind that trade. They buy treasury bonds because they're safer than corporate bonds, right? So this chart trending up is a sentiment gauge because it tells us where is money more happily flowing. And right now, you've had a little bit of a recent pullback in this chart, but for the most part, corporate bonds are still in demand over treasury bonds. That is a risk on signal. Okay. So we just added this chart. It's kind of fun. I'm really excited about it. But if you know about credit spreads, then this chart is now within your EdgeFinder. So if you have EdgeFinder, it's under market sentiment. It's this new one right here. It's called the credit spreads tracker. There will be more features coming to EdgeFinder pretty soon. We're going to continuously add new sentiment gauges, and we have one that's coming. It's very early in development, but we have crowd sentiment gauge coming, and I'm very excited about it. By popular demand, we are going to have a tool within EdgeFinder that goes through all of our sentiment tools and builds a overall summary of what the crowd sentiment, as accurately as we can give it to you, what the crowd sentiment seems to be across our indicators. So stay tuned on that. But if you're an EdgeFinder user, sentiment tools are coming. We have more technical tools coming. We recently added the momentum heat map. We added the volatility heat map. AI news feed is here. We also, of course, have our top setups indicator, which is continuously being updated and refined to build better reports for things that look strong or weak. NASDAQ signal so far seems to be off to a good start. Let's see what the stock market open up in 10, 20 minutes, if that is still the case. It's been a very volatile last couple of weeks. So we'll see. By the way, if you don't have EdgeFinder, my goodness, guys, it's Black Friday week. We're currently offering 45% off the EdgeFinder. It's the biggest discount of the year. I'm super excited for it. This is usually when people who have waited all year get their chance to buy the EdgeFinder at the best price of the year. If you've waited patiently for your copy of EdgeFinder, it's yours, man. Let me tell you something. EdgeFinder is a one-time payment. You don't pay monthly. It's by design. I don't really like monthly subscriptions. I don't like the idea of paying $100 or $200 a month into Continuum. I like the idea of buying something and then you get access to it. We do that with EdgeFinder. It's a one-time payment. You get access to our tools. I cannot tell you how many people say all the time, Nick, you should make it a subscription. You'd make more money. And I'm like, yeah, but I like the idea of making it one time for people. I prefer the idea, if I wanted to buy this product and you told me it's a lifetime purchase, you pay once, you get access to all of our tools, and we continuously update and add features and you don't have to pay for them. I'd say, show me where to check out. I'm buying that thing right now. If I could buy this thing for what it's costing right now, I would. I've spent quite a bit of money building this over the time that we've been working on the last few years, and I wouldn't change a thing because it's worth every penny we've spent on it. Check out EdgeFinder. It's 45% off. It is the best time of the entire year to pick up a copy of EdgeFinder. It's 45% off right now. It's a one-time payment to get access to the tool. You get access to our top setups indicator, our market sentiment tools, our AI news feeds. I mean, the tool has never been better. We have added so many features in 2025, and 2026 EdgeFinder is going to the absolute moon. This thing is, I mean, we have a backlog of projects that I think you guys are going to love. They are by popular demand, what our audience has been requesting from the tool. And I can't wait to share them with you. The tool's going upwards from here. If you're an EdgeFinder user, if you are an EdgeFinder user, there's never been a more exciting time to be an EdgeFinder user, because now we've built all the infrastructure. We're rolling out the big guns in terms of really powerful sentiment tools and economic tools to make all of this stuff more accessible to you and ultimately to help you find better trades. That's why we're in business. We build tools that help traders to scan markets more efficiently and find high opportunity trades in their trading. Again, 45% off. Do not miss your chance. The sale is ending soon. Scan the QR code below the screen. I know this is a fat sales pitch, but I'm telling you, man, if you like my content, if you have any trust in what I am telling you on my channel, you shouldn't trust anybody. You should verify everybody. But if you do like my content, if you see the value in my content, boy, are you going to love EdgeFinder. It's worth every penny. Get it. Black Friday's ending soon. 45% off. Message in right there. When I saw this new tracker, I did some research and learned a few new things. This is the most important feature of EdgeFinder. It teaches financial literacy. You can learn a lot of stuff just clicking through EdgeFinder. Credit spreads tracker is great. This chart provides more comprehensive umbrella-like data than COT data. Yeah. EdgeFinder fully leveraged. If I was ever going to, well, EdgeFinder, I did fully leverage. That thing is, you know, we've invested a lot of time, energy, and money in terms of our team's development of this product. It's, I'm all in on EdgeFinder. No hesitations, no doubt, all in, full margin EdgeFinder. Because it's it's tools that I think are game changing. To have so much data in one singular platform. I mean, these are my two tabs when I trade: TradingView and EdgeFinder. That's all I need. And I've got everything I need to find the trades that I take. Gold here, moving averages still look okay. We're still holding that 20 period moving average. Let's see if we can continue to do that. I have a long position. It's a small trade, but I do think momentum could carry us through end of year. I think we're going to get a rate cut in December. We'll see. We'll see. It's a weird one. It's a weird rate cut because this rate cut, guys, is very much make it or break it based on Fed committee member sentiment. What I mean by that is that if we get some votes like we saw on Friday, there was the New York Fed president came out and he said some very dovish things. He said inflation long run still looks intact. We could probably cut rates, basically. And the market loved that, right? Because again, that sways the votes. The sentiment goes, okay, maybe rate cut makes more sense. If the Fed committee members are, starting to lean into a rate cut, that might sway some votes into the favor of a rate cut. So I think that's positive for gold. I think it's positive for stocks. I think from a technical basis, if you're watching gold this week, from the 4-hour candle perspective, you've got, let's just clean this up a little bit. You've got some resistance overhead. I think if you can get above those levels, look out above kind of thing. If you can get this kind of move, you get a breakthrough 4,100, right? That setup looks good. That setup looks good. From a technical basis, bulls, I think would love to see that kind of move, break out of this little choppiness. Gold, I mentioned last week, like EdgeFinder reading has been kind of back and forth wonky on gold, but so is just the price of gold. Gold has just been in a range. It's not really been moving very much. That's why I've been trading the NASDAQ a lot more. I just feel like there's a lot more movement. There's a lot more conviction to my setups. Let's take a quick look at the VIX. Volatility did jump last week pretty high. Had to move up to 28 at one point. We'll see. I do think that the VIX, I tend to think that the VIX will probably fall this week during Thanksgiving week. Could be wrong, but I think lower vol is probably a fair slight bias for me this week. We'll see. Gold on the 4-hour looks like barbed wire. I like it. Nick, could you do a video explaining the new tool? Yeah, I probably will. I've got a lot of videos to film, but yes, I periodically will go through and update new features by making videos. Our team does a lot on the website. more than likely, before I get to a video, we will have, if you are EdgeFinder-tour, this page here, if you want to explore all the features of EdgeFinder, I'm gonna drop the link here in the chat. Grab this when you get the chance. You can go through all the different features. Julie from our team has done a really good job. We've made pretty much a guide on all the different tools and features that EdgeFinder offers. If you have the EdgeFinder and just want to know more about it, we've got all of our videos categorized here. It's a much easier way to find your way around EdgeFinder in terms of education. So just head over to a1trading.com. Under EdgeFinder, just do tutorials, and you can go through and find this page, or just click the link that I just dropped. But either ways. And again, right here, if you want those Black Friday savings, chat with the team member right there. It's a real person on our staff. They can set you up. Okay, so yeah, VIX I think has room to come down. Dollar index, let's see, where are we at with DXY? DXY also very boring here recently. I think you're kind of just waiting for a rate cut or not. But at the same time, if we take a look at major currencies, there are some that I like here more to the upside, specifically dollar yen, dollar CAD, dollar Swiss. Let's look at dollar yen really quick. So dollar yen, looking for one of two scenarios for this one, either up and above 158. Pullbacks look good. Or if we can get a little bit of downside here, could step in. One concern a lot of people have about the Japanese yen right now is whether or not the Bank of Japan is going to step in and intervene, strengthening the Japanese yen. They may not like where it's trading currently. So we'll see if that happens. Those things are very difficult to try and predict. Though historically we know that we have seen the Bank of Japan step in up in these 158s to 160 level. Historically, they did not like those levels being traded. So Bank of Japan stepped in, bought their own bonds kind of thing. So we'll see. We will see. But until then, I mean, if anything we learned a couple years back from the Bank of Japan interventions is like buying those dips historically worked out better than it didn't, right? So if the Bank of Japan comes in and we see a huge whip down in price, obviously not financial advice. I'm not telling you what to do with your account. But, some of those were really great buying opportunities, and, people kind of shrug it off pretty quick. Bank of Japan's like, all right, we're going to buy a bunch of, or they just start buying like crazy on their own currency, but then it kind of fades and the price rallies right through it. That happened so many times in 2022 and 2023. I remember Ivan from the stream and I talking about that quite a bit. Let's see, US oil. Let's see, do we have any other? Well, let me just finish this dollar stuff. Dollar CAD. Dollar CAD. Price action looks pretty bullish. This kind of setup or this setup like that. Not really at a setup for me right now. Dollar Swiss is close to the upper limits of this range, I think. Yeah, if we can get this kind of move, I like that for upside in the dollar. Pound dollar, I do also like this one as a short. Pound dollar's kind of rolling over in slow motion, it looks like. You've had key support get knocked out here, retested, sellers have stepped back in. I think we may be headed back down to 1.29 or even 1.2750. UK is not on my favorites list right now. If I go over and I take a look at UK economic heat map, it's rough, man. It's rough. The UK's got a difficult circumstance. It's got low growth, very low growth, in fact, negative growth in terms of their economy. At the same time, services PMIs missed expectations. They're expected to come in at 51.9. Services came in lighter than expected. That is a bearish outlook, forward-looking indicator. Retail sales numbers also came in worse than expected. Big miss there. CPI is high. This is problematic because the central bank, the Bank of England, wants to keep interest rates elevated to hurt or to put away this inflation problem. But if they keep interest rates elevated, it continues to hurt growth. They're stuck in a difficult circumstance. I think the path of least resistance personally for the pound is to move lower. Okay, so that's my take on it. As always, we manage risk. We trade constructively around it. But British pound is getting one of the weakest readings. Same with euro on our economic surprise meter. So recently, economic data coming out of these places has been very poor versus expectations. Yeah, actually, interesting. Euro dollar, pound dollar. I mean, I like pound dollar more for a short personally, but euro dollar as a retracement up to this area, I would lean more towards some bearish action there. And pound dollar for me would probably be a sell on a rally up into this 1.3150 level. Quite interesting. I mean, again, if I look at this chart alone, this is, for me with currency trading, this is pretty much all I need for a chart, because it's just telling me which currencies here, especially if you're trading them actively. Like if you're, very long term, this chart might not necessarily be great. I've heard Marco explain that really well. If you're more trading them, this is a really interesting chart because it shows you which currencies are strong versus their expectations. Like GDP growth was expected to do this, and then it came in better, or PMIs were expected to do this, and then it came in worse or lower, right? It's mapping that out and it's tracking all the economic data for you. So I really like this tool. So pound dollar is probably I'm going to say pound dollar is probably my most convicted currency trade right now to the downside. Interestingly, if we get a little bit of a rally in pound dollar, I think price action has really shown you, you've had some sellers coming into this chart. I think the UK economy is really in a tough circumstance. They're dealing with stagflation risks. Bank of England is divided like the Federal Reserve on what to do next. But the difference between the US and the UK, the central banks of both places are tricky. They have the same interest rate currently, right? The difference is the UK has no growth. The US has growth. So let's compare really quick, and then we're going to throw over the stream to Ivan. Look at this, right? GDP growth in the US, 3.8%. That's very strong, right? Relative to expectations, it's very strong. CPI is at 3%. It's not great, sticky, but compare this really quick, guys, to the UK. They have no growth, negative growth, and higher inflation. They've got it worse. I think the pound dollar is more of a bearish chart than a bullish one for now, through the macroeconomic data that we just discussed here on the stream. What we're doing here, if you want to be a macro trader, you need tools. If you don't have the EdgeFinder, there's never been a better time. EdgeFinder is getting better in 2026 than ever before. I mean, it's gone to the moon in 2025. It's going to Mars in 2026. If you don't have a copy of EdgeFinder, pick it up. 45% off right now. Here's the link. Take advantage. Do not hesitate. If you've ever thought about getting a copy, you will regret it if you don't pick it up this week at 45% off. We are planning to raise prices and add new features in 2026. You lock in the one-time payment at our lowest price of the year. If you do so today, our Black Friday sale is live. Do not miss it. The only FOMO you should have today is the fear of missing out on EdgeFinder low prices. Okay? Grab it. It's on super sale. It's worth every penny. Anyways, with that said, guys, I'm going to throw the stream over to my good friend Ivan FX, who's going to continue the conversation, see what trade setups he's looking at as we go into this Thanksgiving holiday week. Stay tuned. He's up just after this. If you're someone in the United States looking for a Forex broker, it's been hard to find recently. There's been a lot of changes in the industry, so I wanted to take a moment to tell you guys about Oanda. Oanda is a US regulated brokerage that allows US traders to trade currency pairs like the euro dollar, the pound dollar, the dollar yen, Kiwi yen, all sorts of different currency pairs. So if you're interested in checking out Oanda, we're going to be dropping a link in the chat right now as we speak. They, again, are a huge brokerage in the United States that allows you to trade without the worry of whether or not your account is going to get shut down tomorrow from an offshore, unregulated, sketchy brokerage. They have been around for a long time, and I've used them myself for a number of years. So if you're looking to trade FX and you're in the US, this is the brokerage to check out in my personal opinion. So take a look at it. We'll drop the link in the chat, like I mentioned, should also be in the description of this live stream. Do your due diligence and see if it's right for you. Now back to the show.
Welcome back, says the Yen Man, and I am surprised by the market movements as of the past few weeks. I thought, not on the grave, but about there, about Wednesday, about 10 p.m., and I thought, what if Bank Japan now comes in and says, Merry Christmas. Boom. 400, 500 down. It didn't happen. So I guess yen pairs are still to the higher side. It's a bit of a tough situation to be in. We made so much profits, or left, right, and center. It's amazing. It's fantastic. But yeah, I believe at the core that I don't think that they're gonna do it right now. But what if the FOMC meeting makes dollar weak and then they interfere? Because I saw someone aren't the dollar weak because they're gonna do rate cuts in December. Well, that's been in and out, out and in. I don't know what's in or out at this point, but 60% chance of a rate cut in December. We looked at some Fed members speaking this week, and they're like 4 out of 5. Okay, 4 out of 9 are hawkish, and 5 is dovish, and whatever that was. Like, they're very split. Generally speaking, they're very consensual. They have all of them are agreeing in one direction. Market doesn't agree, so maybe. But as of this morning, or as of this evening, dollar yen is going slightly higher. But Nick said, what about the trading pairs or setups that I'll look at? So we had a bit of a discussion yesterday. And I'm referring to the weekly planning meeting inside the Discord. And I thought, okay, I think EuroCAD is going to go higher until 22nd of December. Okay, so it's from about today to about then. That is not financial advice whatsoever. And then we'll go to seasonality, and it's supposed to be, or it's supposed to go up, I don't know, 1.3% or so, or at least according to this. And we are in a bit of a low price. And I thought about it, and I thought, okay, what if we just take the high? No, just take whatever the price was. As I was looking at it, going on that candle, it came down the red or the white candle for me. And I thought, okay, let me buy it. So started writing down all the things that is necessary to present and trade idea, and market went higher. And then I said, don't worry, prices are going to come back. And generally speaking, it gives you even better price than I normally have. And, well, it is currently coming lower. So it's not all bad. It's not all horrible. It's kind of giving you the pullback. And if you have even more ice in your tummy, you might even get a better range than me. So don't worry. And if you miss today and everything goes sideways and everything just goes straight to the moon, it's 4 weeks. So 4 weeks of pullback. It should be good enough. And I hope they bring in, well, 400 or 500 pips. And if I looked what happened last year, which I normally tend to do in this situation, I really love going back to last year because it gives me a sense of comfort that if I were to do it last year, at the same time, that was about Monday 25th to about 22nd there. About there, that was about 390. I'll live with that. That's okay. And that's kind of how when I only do euro, only do seasonality moves, and I can't really explain to you why it happens other than euro got really strong this morning, and I can't really tell you why, other than maybe they are hoping that there's going to be a deal with Ukraine, or there was some volatility from news. If it was volatility from news, I believe when I take a trade, it's going to go in my favor. So, regardless. I liked the bit of I like the move higher, and if it comes back down and now takes me totally out, I'll still have my celebratory mindset being okay, cool. It did what it did. It's down to the market now. I did my chance, and I'll come back next year. I'll probably do the same thing again. Pound yen, says JB King Priest. Dollar, pound dollar. Okay. I said yesterday that this week, I'm looking for, not necessarily looking for, but I expect ever so slightly dollar weakness. And then from last night, we have come a bit lower. We're now having a bit of a spike higher. And I thought, okay, what if? What if it goes lower? What if this is the high? For whatever reason that might be, I don't know. It's a resistance. Market has done what it does. But what we have seen in the last couple of days, trading days, sorry, is that we have seen market pricing in another rate cut again. They priced it out, and now they're pricing in again. So that generally should weaken the dollar. Seasonality says dollar's going to weaken from about this week. Euro is supposed to rise from about this week. So it kind of all comes down to, are we bearish? Is this bearish price action? It is neither, but it has to break 100 going down to 99 for me, or not before, but I need to break 100. So until then, I can just put on alert and says, okay, if I break, then sure. Until then, I'll wait. Avoid putting stop loss. Big institutions will have an idea where retail traders are put a stop loss. High Forex until Wednesday. They already know. They have tons of data, and even I know where those stop losses are. I don't have access to the flow, and of course those data are sold. But no, it doesn't take a genius to figure out where the stop losses are for retail. And I am going to go as far as, if you are a trader without stop loss, you are running a humongous risk. If I didn't have stop loss, I wouldn't be here today. So there's that. So that's my take on dollar. And then that kind of leads me to pound dollar. And I said yesterday, I really want these to come up today or tomorrow up to a price of 130, 150 or so, and then fall. We have the UK budget on Wednesday, 26th, and they are going to present, I guess, presumably higher taxes. That isn't necessarily very positive for the pound. So any price higher for pound pairs could be seen as a sell opportunity. That also means that pound yen, which today is having a bit of a good day, runs the risk of being run over on Wednesday. So if you are in a pound trade, I would say, okay, you are run the risk. I am not in a pound trade at the moment, but the risk is there for high volatility. So make your choices thereafter. That means that if you're going to trade pound pairs, you really should be in a position of reducing your risk, because this can move. I'm guessing a good 100 pips in just a moment or in just a second. So be aware of that. Stop loss and that slippage might happen. You might not be able to get out when you want to get out, the price you want. So there's your risk laid out flat and simple. Do you do what you think is best for you? I don't have an entry right now, and with this red candle, this white candle going lower, it's even less likely that I'm going to get an entry at the current moment. I yesterday said dollar Swissy should go lower this week or going forward, and until mid-December. And we have, after that, gotten a brand new low. Fantastic. And I say that is my number one trade. Number one is the first pullback and the first resistant market makes a contact with. Now we need to make a brand new lower low, come back again before I am even halfway interested. So if today dollar weakness happens, this is kind of how my trade would look like. Stop loss somewhere above these highs, and 50 pips is small for me, but 60 should be okay. Volatility should take it, and then all the way down to a target for this week. Cool. And that would be about 79.26. When am I expected for this one to hit a home run? I'm expecting it to hit a home run about tomorrow morning. So last week I got some comments and saying when I got an entry here about Tuesday morning, 7 a.m. I said, Evan, you were very late. Or you told us very late. Market already moved by the time you entered into it. I apologize. You have fairly been warned that if certain conditions are met, I am only myself going to take the trade. If you want to take, you do you, if that fits whatever your situation is. And currently, at the moment, the risk is for this one to go even higher. And if it does go higher high, then I am absolutely not going to chase anything that is currently in a bullish trend. 27 Trust, I've seen that you have asked for Euro Swiss. And Euro Swiss is kind of like Alabama. They're very close, not really great, and it has gone higher. Every time Euro Swiss comes down to 0.92, it mysteriously starts to go higher again. And I would argue that if I were to be a buyer of this one, I would be a buyer down here. So that is about 100 pips ago and about last week. So to me, you are in a situation, are we going to go lower? And that's potentially a very good idea. That's potentially an idea, but you don't currently have, as with dollar Swiss, you don't have lower lows and lower highs. So in the grand scheme of things, there is an overall downtrend, but for the risk part, you have done 100% retracement of that move lower, meaning whatever Chase did lower, exited, got out, so you would hope and see that they will get in again, then you can follow and join. But at the moment, this one to me has unfortunately an upside direction. So, but until it's proven that it goes lower, then I'll look into it. Dollar yen was briefly mentioned earlier, and dollar yen to me is very close to a monthly target at 50 to 58. I've mentioned this a couple of times already, and the Bank of Japan says, well, I think that mentioned price level, but I think it's Goldman Sachs that has mentioned 160 is going to be a price where they're going to intervene. They have talked about intervention for about 2 weeks now. That, of course, increases the risk, but for the market, that just increases the fun. Because when are you going to do that? And what generally tends to have happened in the past when they did that in 2024, I'm 2023 now. So this is 2024, and they say we're going to intervene. We're from about, I don't know, February or so. I don't know when they started, somewhere in this direction. And they said, we're going to intervene. Market then rose a good 1,000 pips before there was actually an intervention at about 160 or 159 or something in that direction. So now actually, though, the intervention was up there. So for them to do intervention, they've said they want to find some dollar weakness scenario. So what dollar weakness scenario are they then going to look forward to? I don't know. Maybe FOMC is the next one because of lack of data, or some kind of market open and in a week or so. It's like a market open or the difference between the time between US open, the new US close, and Asia open, a time with lack of liquidity. And I tried at a bit of an earlier stage to do some intervention or some recalibration. Wasn't good enough. So they put on the big guns. But even then, at the end of the day, market still went higher, even though the volatility in between is a good 500 pips almost every single time. But they're trying to wait for a dollar weakness period so that they don't need to spend a lot of money on it. I understand. The other thing that the market can do here is, of course, do what the market does best, is that this is a reversal. Because I have said for this week that yen pairs are supposed to go lower. We're supposed to peak this week. But it doesn't seem like euro, yen, dollar, pound, yen, euro, yen, Aussie, yen is a fan of that idea. The yen strength that I said was going to come hasn't really shown up, other than, well, we have maybe this is a pullback, maybe this is a reversal, but it hasn't confirmed anything yet, because that's just a pullback to support, and it can by all means continue lower. Because what on earth could send this yen lower, you might ask? Well, last week which I haven't seen any direct market reaction to, was that last week that they said they're going to spend 43 trillion yen on a QE package, total completely. And the market didn't really send yen lower, but if that's what's trickling in, then I think this is going to continue higher, dollar yen continue higher, and defy the weakness that's supposed to come this week. And that's the only kind of reasoning that I can say, okay, that would send the yen prices higher. Second of all, or over the weekend, or last Friday, we saw that Bank of Japan also came in and said that they are close to hiking interest rates. And the market didn't really care. So it's a cat and mouse. It's a cat and mouse game. We love it. We love it. We love it. And if dollar yen falls by any chance, by any means this week, and this is the high of 157, then market in about 1 or 2 weeks anyways is going to go higher anyways in December. So it's just going to be a temporary pause. Market's going to be like, well, we're just going to give you this to you for so far, and that is it. S&P 500 on the 2 minutes ago, I saw it making a new higher high, and I was like, well, I really want this to go higher. And I said yesterday, I don't really understand why this one is going so much lower, other than it's a repricing. Markets thinks, well, how many can we shake? Who is going to lose their confidence in this? How much losses can we inflict on somebody that has been too highly leveraged, don't have the patience, and when market falls, doesn't see the necessity of, getting in again if you then decided to get out, aka having a proper strategy when things start to sour a bit. And they say it's a bubble. They are worried about that whatever we are pricing so far is not going to come into fruition in terms of income. I understand and I agree, but at the end of the day, we are supposed to go higher at the end of the day. Why? Because that's what businesses are made. That's what humans are made to do, to always improve, always do better, and always look for ways to make money. At the end of the day, these companies are going to make more money. But there is one caveat to this whole story is, what is the interest rate or cost of financing going to do in the meantime? And that, of course, can send S&P 500 lower and NASDAQ lower. So right now, I'm just, patiently waiting. Do you turn around, sir? Do you not turn around? And if you don't turn around, then I'll wait for you at a much better price. Euro dollar, as mentioned about yesterday, say a lot about yesterday. Sorry. Your dollar has not made a new higher high yet. It has not reached above my resistance level, so this can continue down, for that matter, forever right now. But if I were to say, oh, this is a number one trade, if it was about there, so we have made a double bottom at about 4 hour, so it doesn't really matter. This can go into a range, but what I ultimately need from you and from this is for this to be broken with a candlestick higher tomorrow, and then I will look for my entry. New Zealand dollar, same story. If I were to buy it with the dollar weakness, though they have a meeting this week, the Reserve Bank of New Zealand, so this might also just take a turn lower, so don't really bother me. Again, dollar Swiss, waiting for it to make a new lower low. I'll take it whenever that is. And then to my lovely friend, my lovely poor friend Maxi, is that your Aussie also, just to mention, if you find a trade in this direction, that seasonality is higher. So if you find a trend or a market that is on range bound between now and 22nd of December, well, that's at least another directional trade that I would look into. Now, would you get Aussie weakness going forward? Maybe not. So that's why I'm putting it on the watch list of, hey, it might be a thing to look forward to. If we start trending like a normal Forex pair, like something in this direction, that's very varying the pullbacks though, but nothing like this, maybe like this, nothing like that. But yeah, something directional, that would be great. This isn't directional whatsoever. So that is kind of also another point. So for dollar yen, the real critical question is it going to break above 157 at the moment? Your CAD, is it going to come below my 162.40 level entry? Can we get a better one for tomorrow? 62.20. It's a question mark. I would like that to happen. And then I've seen some traders in this group talking about FOMO, running off the trades and say, being here and entering here. And I only have one message for you. Pause, take a deep breath. Remember, what are you supposed to be doing? And know that there is limit orders that you can do. You can wait for price to come back down. And if it does reach higher, it does go away from you, and it does leave you along left on the train station, just go to earlier in the pair and be like, okay, we did go very much higher, and then we have a big pullback. So you don't want to be caught in a situation where you are going to be having more losses than me and secondly Nick or whoever else you're looking at, because you couldn't wait for the you couldn't wait for the market you couldn't wait for the market to come back down to your level again. Impatient is very expensive, and that's why I feel like that's why I'm here. That is my kind of calling here, is to help you guys. Come to me, send me your chart, be like, Ivan, what do you think about this? And I'll give you a couple of sentences or what I think and what could potentially be good or bad with your trading setup. At the end of the day, you need to create a sustainable trading system that is based upon you trading and testing and failing and testing and failing until you have figured out what works and what doesn't, and be extremely happy that you have found something that actually works for you, instead of winging it and not knowing what you're doing, because that creates so much anxiety and so much stress. And that's also why I love to help you guys. I do have a mentorship, and this week it is 50% off for the Black Week. So if you're interested, you can hit me up on my YouTube channel, send me an email, or go to Discord and ask. I'd be more than happy to help you. But until next week, I love you. Don't disappoint me, but make me proud. Boom.
Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing up to 90% and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show.
Hello everyone, welcome to my segment of the stream. So I hope everyone is doing well. Hope you had a good weekend. Yeah, so the markets, I think Nick and Ivan probably talked to you about the markets, considering the NASDAQ, considering the crash, the S&P, the stock market. I have actually been reading a great book, which is called 1929. So let me show you. This one, 1929, from Andrew Ross Sorkin. So it's about the 1929 crash, which led to the Great Depression. And what you can find when you read the book is that the conditions in 1929 were pretty similar to the conditions today. What do I mean? Well, the stock market was roaring, like you can see here. The US economy was doing pretty well, like you can see with the massive GDP print. Let's just take a look at that. So yeah, massive GDP print. And inflation was running hot. The CPI, USD, what can you see? Inflation is 3%. Inflation is way above target. And on top of all of that, the government had their hands into the Fed and were influencing the Fed to cut interest rates. What is happening in today's market? You have Trump influencing the Fed, calling for lower interest rates, and you have rate cuts scheduled for the whole of 2026. So by 2026, we should be in the 275 to 300 basis points in terms of the interest rates. So we should get quite a lot of rate cuts. And it's pretty interesting to compare conditions in 1929 to the market conditions that are present in today's market. Okay, now that sounds a bit bearish. That sounds like I'm a perma bear. That sounds like I'm calling for a crash. Well, actually, I'm not. I just find that interesting. And if you like reading books, it's an awesome book to read. But I actually think there's not going to be a crash. I'm calling for a pullback, but I'm not calling for a crash. And we already had a pretty nice pullback on the NASDAQ. So essentially, my thoughts can be translated onto the S&P, but I'm choosing the NASDAQ because it is my favorite thing to trade as far as US indices go and US stock market goes. It's volatile. It's heavily influenced by the tech stock market. It's kind of like a meme indice in that regard because you have Nvidia and Tesla, and those two stocks are just meme stocks. So they're like Bitcoin. So the volatility is high, the movement is high, and you can get some pretty healthy reward to risks on the NAS. So we already had quite a pullback from the peak to the trough. It was minus 9.4%. I would have liked to see it go a bit lower to 2,300 and possibly touch the 200 EMA. See, it would be right here. That didn't happen yet. So there could be a bit more downside, but looks like we are recovering on this Monday. One thing that you can also look at is if you analyze all of the Mondays during Trump's presidency in the stock market, you're going to see that Monday is usually the best day of the week. Usually Mondays have the best performance of the week because Trump does an announcement on the weekend that usually pushes the price higher. So it's a seasonality occurrence, and it is something you can use to structure your positions. It is an added confluence that if you take trades on the NASDAQ on Monday, you got an extra confluence, you have extra, let's say, chance that your trade will work out. So I thought that was pretty interesting as well, and something to note. I don't have a position in. So the last risk on position that I tried to execute was on Bitcoin. On Bitcoin, I actually tried to get in on a buy setup, but it did not work out. So I unfortunately got taken out. I unfortunately got slaughtered right there. And Bitcoin just fell through like a falling knife. So that was the last risk on position I had. Now I'm being a bit more patient. I'm waiting out this situation. I'm seeing how the situation will develop. I think Nick took a buy position here, if I'm not mistaken. I think he did try to get in here, and I think he's still in the position. I'm not 100% sure. But for me, I was expecting possibly a bit more of a pullback. Current positions that I'm in, I'm going to remove silver. So I closed this trade, which you already know if you have been following me. So let's also remove silver from the watch list. Put it back to here. I'm in pound Aussie, short. I'm in USD CAD, long. Okay, that is my game plan. And also, I want to show you, because I find it pretty interesting, if you are keeping up to date with my ChatGPT trading challenge, my current equity is around $53,711. So I'm approaching the phase 1 target. For those of you that don't know about this, I take daily trade signals from ChatGPT. So purely ChatGPT signals, no influence from me, and I put those trades into a 50K DNA challenge. And currently I'm up around, I think, 7.5%. So I have a trade running on euro dollar. It's a buy. It is in a little bit of profits, so we will see how that will develop. But essentially, pretty healthy equity curve. I managed to climb back out of this drawdown, and now we're back to all-time highs, so all-time equity highs. Just wanted to give you an update on this. Maybe I can finally pass phase 1 before the year ends as a Christmas present. That would be pretty cool. Also, if you want to get funded, if you want to get a funded challenge, expand your trading capital, you can get 25% off DNA with our code A1Live. So A1Live will get you 25% off any of the DNA challenges. So take advantage. It is the biggest discount you can get for DNA. And when you're looking at prop firms, when you're looking at reliable prop firms, this is the best price, in my opinion, and from my research, that you're going to get. Again, yes, you can get some prop firms with 70 or 80% discount, but those are pure scammers. For the reliable firms, with our code A1Live, 25% off, you get a great competitive price and you get a reliable prop firm. Something that I also wanted to mention, Forex calendar for this week. Let's take a look. So last week was NFP. It was pretty much a Goldilocks NFP, but I would say a net nothing burger on Thursday. And this week we have some dollar inflation prints. So the PPI, which should be interesting. It should be important. And we have the UK budget. So autumn forecast statement. Now that's going to be pretty important. I think most pound traders have been waiting for the UK budget to come out this week on Wednesday. It's going to be a big one. It could be pretty volatile. I'm net bearish on the pound. I think the data they're getting is just horrendous. I'm, of course, selling pound Aussie. So I do have some skin in the game. And we will have to see how this situation will develop. Another thing that is important, if you are trading the CAD, GDP numbers are coming out this week as well. As I told you, I'm long USD CAD, so that is another data point that I will be paying close attention to. hopefully this thing just ends up negative. So the trend so far in the GDP for Canada is negative, and net, I would say negative, or not net negative, but all over the place. If you look at the trend, what is the trend? What is the overall trend? I would say it is down. So from this point, I would say you can draw a trend line through the median of these data points, and it would look like this. So a shot to the downside. And yeah, now let's take a look at the comment section. Let me see what you guys are saying. Hey Sluggy, what's up? I'm doing pretty well. How are you? Joshua, hello, welcome. What was the SMC of 1929? Ooh, SMC of 1929. So I think Josh is talking about like smart money concepts like ICT and all of those other scammers. Well, in the book, there's a couple of ways that big players get together and they manipulate the markets. So essentially what they did in 1929 is illegal nowadays. It became illegal because of what they did. They basically got together and pumped and dumped the stock market. So the exact thing that scammers are doing to the crypto coins today, big players, and these are like big players, reputable players, heads of massive companies, they were pumping and dumping the stock market, basically. So they got together and they bought something at the same time, and then they dumped it onto the retail. And they had a lot of fun. And it was legal back then because the stock market was totally unregulated. So I guess they were the ICT of 1929. Pound Aussie, I'll cover it a bit more if you want. Gold, yes, the metals market. ChatGPT is just on a lucky streak. I mean, I thought so as well, but I've been doing this test since June. So I started this challenge since the 1st of June, and currently ChatGPT is up, I think, plus 33% from the 1st of June. So it could still be some sort of a lucky streak, but it is a lucky streak that is lasting for 6 months, maybe even 7 months. But yeah, I mean, there are strategies that work for 1 year, maybe 2 years, and then they just go into massive drawdown. So I would say a proof of concept, a proof that you are a good trader is like 3, 4, 5 years of an actual track record. But we have to start somewhere, and I mostly do this testing for my content, for the content on my YouTube channel, because it does get quite a lot of clicks. They use DGC, Dynamite Gap concept. 60% of the time, it works every time. That's from the movie. I remember that quote. Did you go digging slugs? Hey, Robohola, what's up? How's the New Zealand economic heat map? I'm actually not trading the New Zealand right now, but I can show you the NZ. Bullish, net bullish, but this is the short term. So you have to distinguish between the short term and the long term. Short term seems bullish. Long term, let me give you my process. I look at the trend. So how are the data points looking? And they're not looking so great in terms of the GDP. In terms of the unemployment, let's take a look. Rising unemployment doesn't look great. And then inflation, I think inflation is okay. Rising inflation as well. So not the greatest look for the New Zealand dollar. I would say short-term bullish, long-term bearish, which is not the best. While for the Aussie, for example, when you look at the Aussie dollar, Australian dollar, here, both short-term and long-term is bullish. See? Short-term bullish, and then we look at the GDP for the Aussie. It is good. You look at the unemployment rate. I would say it looks better than most of the other currencies. It's not the greatest, but it's not so bad. And the inflation, the recent print was hot, but overall not so bad. So overall looks okay relative to other currencies. It definitely looks okay. Metals market, gold and silver. I was expecting for a bigger reaction, if I'm being honest. I was expecting for a bigger pump to the upside. For now, they seem to be a bit flat, a bit stagnating. I thought with the US government reopening, with the massive printing that is continuing, basically, because the US is going to print a bunch of money. Trump's big beautiful bill. There's going to be increased government spending. You know what that means. Inflation goes up. How can you protect yourself against inflation? Well, you can buy things like gold or silver. So fundamentally, gold and silver should go to the upside. Let's see the top setups. Gold. No. Neutral. Silver is neutral as well. Did we get the commitment of traders report? I think we did, but it's not going to be the latest COTS. So we did get a new COTS, but this is all data, I believe. So yeah, I don't think this is the most recent data. I don't believe, but I would have to check that. We do have the government shutdown update commitment of traders publication schedule. Okay, so this is not as straightforward as I thought. But on the 19th of November, we got the print for September. So yeah, okay. I don't think this is the latest data. Metals market, net I'm bullish, but I'm not seeing movement right now. I'm seeing flat price action. I did take an attempt to go long. I wanted to trail my stop loss. I was betting that the price will continue trending higher, and then I can just trail my stop loss below the swing lows, but unfortunately I got taken out. I took 50% off at the high, and I let the rest run, got taken out right here. So I'm out of the metals market. Now I'm being more patient. What is your opinion on the long-term future of the British pound? Interest rates are decreasing, unemployment is increasing, and GDP is dropping, but inflation is also dropping. I would say future is not bright for the UK. I would say UK is in some major trouble. The current weakest economies, in my opinion, is Canada and the UK. They're trying to cut interest rates. You can type BOE interest rates. Essentially, I use this website, Trading Economics, to look at the graph. I think also the EdgeFinder should have it as well. So if we go to interest rate data, yeah, so if you go to the GBP, it's here as well. But anyway, you can see that they're definitely on a path to cut interest rates from the peak of 5.25 to right now 4%. But it's not working. It is just not working because the data is still pretty bad. That should tell you something. That should tell you that the economy is in big trouble. They're trying to save it. It's not working. Unemployment, GDP, rising 5%, uptrend. You can see a clear spike to the upside. CPI, inflation is pretty high, 3.6%. That's massive. So inflation, I wouldn't say inflation is going down. I would say inflation is overall going up. Just the latest data point was lower than the previous one, but I would say net, we are definitely flying higher on the inflation. That is called stagflation. What is stagflation? It is stagnating growth plus rising inflation. So my play is on the pound Aussie. My play, of course, is to sell the pound Aussie. I'm in a trade with limited risk. Fundamentally, pound is very weak. Aussie is strong. Technical analysis, I would say this is in a downtrend, mostly below the 20 MA. So mostly being below the 20 MA, as you can see. And I think there is some room for this thing to go. So I think we can hit this support level. I think that is actually achievable. If I look at, is there any clear support levels that I should be aware of? The first major one is right there, in my opinion. So there is some room for me to take profits. There is some room for this trade to go. There is some room for the positive reward to risk. Ali Said, what's up? Pound, Aussie, and GBP CAD, possibly GJ, are still the sells of this week. GBP CAD is not my favorite, so I can take a look. But for me personally, GBP CAD looks super flat. So super flat fundamentals. Both currencies are weak. That for me is not a good place. So if both currencies are weak, then that does not create a trend, right? The only thing that creates a trend is if one of them is weak and one of them is strong. If both of them are strong, then you get no trend, right? So what you must do in Forex, you have to pick the strongest currency and pair it against the weakest currency. Pound, weakest one. Aussie, strongest one. USD, strongest one. CAD, weakest one. So that's the game. That is the name of the game. Yes, you can do the exact thing with, let's say, gold. You can say that you're bearish on the dollar, so you're buying gold. Yes, that works as well. But with currencies, you get a much bigger edge, because gold, pretty much most gold traders trade gold and silver according to the fundamentals concerning metals. They usually don't just slap on buy positions on gold because they're short US dollars, or they don't go selling gold because they are long US dollars. So much better to go to the currency market if you want to play just currencies. I mean, it's quite bullish for metals to range a bit in order for MAs to catch up. That is true. So at least you're not seeing a massive sell-off. Where is the 200 EMA? Let's take a look. Whoa, okay, so it still has quite a lot of room to catch up. I would agree with Sluggy. Just this consolidation is bullish in and of itself. We already had that happen in April and May. So the same flat consolidation here as well. As long as you're not getting here as well, as long as you're not getting a massive correction like here, see, so this would be a big problem. From 2020 to 2024, pretty much nothing. So just a big flat correction, and that's not good to see. But these small consolidation phases, that's pretty bullish. So I would agree with Sluggy, just this price action in and of itself is bullish. What do you think when a country has a high debt to GDP ratio? What does it mean for its currency? Japan has a debt to GDP ratio of 237%. I would say that is important if you're a very, very long-term trader, if you're kind of an investor. For us short-term traders, the day traders, swing traders that hold positions for, let's say, 2, 3, 4 weeks, it doesn't make a lot of sense. So that's not something that you want to look at, especially because the US has a massive debt, but it is one of the strongest countries in the world, if not the strongest country in the world. So I wouldn't say it's a massive confluence for buying and selling. Maybe, again, if you're a very, very long-term trader, it can help you. I personally don't use it. The people that I follow haven't mentioned that as being a very important confluence. They do talk about, for example, the housing market. So CAD, Canada, is such a good sell because their housing market is really bad. Last 5 years, the housing market has been in a downtrend. So that's a reason to sell the CAD. Okay, hopefully that helps. That is just my experience, my opinion. Maybe I'm wrong. Maybe some professional traders do use that heavily to make trading decisions, but I haven't read about that information. Shorted, look at interest rates projection on the EdgeFinder. Okay, I haven't opened that up. Let me see that. Ah, okay, cool. Okay, nice. That's pretty good. So yeah, see, the US is gonna cut rates. Pretty much all of them are gonna cut interest rates. Now that is pretty cool. So I haven't seen this before, but this is pretty good. And here's the graph. Nice. But anyways, if you're looking to get the EdgeFinder, if you're looking to get all of this data, I use the EdgeFinder every single day to make trading decisions. Or you want to join the A1 Trading Discord. This was a signal. This was a signal. The silver trade was a signal. Mind you, I took 50% off at the all-time high. So if you want to get the EdgeFinder or join the A1 Discord, you can use the code Marco and you can get 45% off your purchase. So the biggest code in 2025, the biggest discount, again, November, Black Friday. If you want to get in, if you want to get these signals, if you want to get this data, definitely check it out using my code and save yourself a big chunk of money. Hey, Ballout, what's up? I'm thinking of going short. I'm still looking for a strong currency pair. What do you want to sell? I spent the whole weekend back testing something I'm working on. Great. So good luck with the back testing. Gold is so expensive, you need a lot of margin to open a position. Well, that is correct, depending on how you're trading it. Are you using CFDs? Are you using ETFs? Personally, I'm using CFDs, and for CFDs, you don't really need a big margin. You can trade with like $5,000. You can effectively trade gold. So I wouldn't say it's a big problem. With ETFs, I think you need possibly a larger margin. So you need more money in your account to be able to make a good risk management, to risk, let's say, 1% on one position. If we use the code Taco Marco, do we get 75% off? I'll talk to the A1 team and maybe we can set it up. That would be a cool discount code. Do you pay a lot of attention to seasonality in trading? Well, not a lot, but it is a pretty important part of my trading analysis. For example, the EdgeFinder has seasonality built in. So if you look at, for example, USD CAD, guess what? Look at the seasonality. End of year is bullish. I am bullish. So I definitely use seasonality to take this position. Let's look at the pound Aussie. I haven't actually looked at the seasonality for the pound Aussie. Looks like it's bullish, so that is against my position, but I didn't take this into account. Maybe I should have. Then if you look at silver, let's take a look at silver. Bullish end of the year. Let's look at gold. Bullish at the end of the year. S&P. Highly bullish. This is the Santa rally. NASDAQ. Bullish. Santa rally. So Bitcoin as well. I think Bitcoin is also bullish, although for Bitcoin, you don't really... Just a second. For Bitcoin, you don't really have a lot of data because you have the 10-year average. Well, actually, you do have the 10 years. Yeah, you do have the 10 years. So you do have quite a lot of data. Again, look at Bitcoin. It was one of the reasons why I took a stab at Bitcoin for long. Unfortunately, it lost. So I do use seasonality. I add it as a confluence. The way that I trade is I research many different data points and I try to assemble a puzzle. I tried to assemble at least 2, 3, 4 massive confluences to buy or sell something. It can be fundamentals, it can be seasonality, it can be technical analysis, it can be housing data, it can be Trump, it can be the Fed, it can be buy the rumor, sell the news, like you had with the US government reopening. That was a buy the rumor, sell the news scenario. So you have a puzzle, you collect pieces of the puzzle and you try to assemble the puzzle and then you buy or you sell. That's the way that I trade. The more pieces I can collect, the more risk I can slap onto the position. I'm up 60K with my $8 account. Congratulations, that is amazing. You should probably start a hedge fund. Marco, what do you think of the pound Aussie, pound CAD, and GJ? I'm bearish personally. Is there any way to backtest fundamentals? It's pretty tough to backtest fundamentals. What you can do is I did backtest the EdgeFinder. If you look at top setups history, here it is, and then you can set your date. And I did some backtesting with this top setup score history. It was pretty good. So, and that's when I decided to implement the EdgeFinder into my live trading. So it can be done, but it's not perfect. It's never going to be perfect. It's going to be actually a pretty hard thing to do. So the best thing you can do is live test with small risk, with minimum lot size. Live testing, I found, works the best because you're in the markets. You're in the markets day in, day out. You're watching the positions. And yeah. Okay, the last thing we will do for today's stream is we will check out Sluggy's comment, which is pound Aussie, pound CAD, and GJ. Again, I'm bearish on all of those currencies. I'm bearish on the pound Aussie, on GBP, CAD, I'm flat, and on GJ, I would say, GJ. Let's see, GBP, JPY. I don't know. I'm bearish on the pound, I'm bearish on the yen, so there's not a massive edge for me here. Obviously, technical analysis is bullish, but it's going to be that's pretty tough for me to get in. And as I mentioned, GBP, CAD, both currencies are super weak, and you can see that there is no clear trend. Up or down, we're doing nothing, we're being flat. So the only pair that I have an edge on is going to be pound Aussie. Pound Aussie I actually like because, of course, I'm in a position. And this is the only one where I can see a clear difference between the two currencies. The pound is clearly weak. The Aussie is clearly strong. So out of those three currencies, I only like the pound Aussie. That would be about it. Thank you guys very much for watching. The thing I'm watching today or this week is going to be the UK budget. I told you about it in the Forex Factory calendar. Autumn forecast statement. It could be a big one. Everyone is waiting for that UK budget. I'll give you an update in the A1 Discord if there is anything important. Yeah, thank you for watching. Good luck this week, and I will see you tomorrow in the stream. Goodbye.
You've been watching A1 Trading Live. We're here Monday through Friday, where you can tune in to hear insights from professional traders from all over the world. All month long, our products are 40% off, the biggest discount of the entire year. You can get access to our trading softwares, trading community, and so much more right now on our website, a1trading.com. Make sure to subscribe for future streams, and don't forget, if you're looking to get access to free courses, prop firm discounts, and free trading tools, as well as massive discounts on all our products, head over to a1trading.com. See you next time.